Guys, welcome to the show. Today, we're going to talk about how to save you money on your mortgage. So stay tuned. We're going live right now. Hey everybody, welcome to Sacramento's Real Estate Channel, where we talk everything there is to know about the brand new bills and of course, what there is to do here in Sacramento. If you've been thinking about making a move to the area, subscribe to the channel. And just so you know, we go live every Tuesday at 5:30 p.m. We'll see you there. All right, well, there you have it. Today, we are live. It's a beautiful Tuesday evening. As you guys know, we go live every Tuesday at 5:30 p.m. My name is Sam Golovey, your host. And today, we're going to talk to you about how to save some money on your mortgage. More importantly, how to save money off of your mortgage insurance. And today, I'm actually doing a quick collab with one of my preferred lenders. He is the mortgage guy. I'm going to have Aspenlind joining me for this special stream. Sean, how are you, my friend?
Hey, Sam. How's it going?
Oh, it's so good to see you, bud. How's everything been?
You too, man. Yeah, doing great. Doing real well. Excited to be here.
Awesome. Well, I'm going to jump right into it with everybody that's watching. I know a few people are going to watch after the run that they've already notified me. So there's a new loan product that you've been telling me about, something very exciting that's saving people some money and busting down some myths as far as getting a home loan without mortgage insurance. Can you give us a little bit of insight on what that is?
Yeah. So up until last week, really there are only two ways to avoid mortgage insurance on a conventional loan.
Okay.
The most common way was known to be able to have to put 20% down. So if you put 20% down as a down payment, then 80% of the loan is left. Therefore, there's no mortgage insurance. Okay. So that's the most traditional way you'll see it. Okay. There's another way that's called lender paid mortgage insurance, where the lender will basically eat the cost of your mortgage insurance, but hike up your rate quite a bit.
Okay.
So depending on how much you put down, depends on how much, what rate you're going to get, your credit score, all that stuff. It's not super popular, not super common.
Yeah.
But as of last week, as a mortgage broker, I work with a lot of banks. One of the banks that I work with, actually my favorite bank I work with all my clients, they just rolled out a new conventional loan program that is 10.01% down payment. So as long as they have 10.01, as long as they have a 680 credit score, and as long as they're in a conventional purchase, they can do 10.01% down and have no monthly mortgage insurance.
Wow. Okay.
It's huge.
So let's take it a step back. So maybe the people that are watching, they've never really dealt with loans or never had a loan. What is mortgage insurance and why is that important to them?
So mortgage insurance traditionally up until last week, but mortgage insurance, if you're a first-time home buyer and you have good credit, you're probably going to be going with a conventional 3% down option. Okay. 3% down is the minimum required for a conventional loan as a first-time home buyer. Okay. So the less you put down, the higher your monthly mortgage insurance is. So if you put 3% down, let's just say, for the sake of an example, let's just say if you put 3% down, your monthly mortgage insurance for the house you want is going to be $200 a month as part of your monthly payment. But if you put 5% down, then maybe your mortgage insurance drops to $150 a month. If you put 10% down, maybe it's $100 a month. If you put 15% down, maybe it's $50 a month, right? So you kind of see big picture correlation. So this new program kind of disrupts that, because now I can promote and market that, hey, we're doing 10% down conventional loans. So you still need 10% down plus closing costs, but it's saving you about $100 a month compared to the traditional 10% down with $100 a month of mortgage insurance.
Wow.
And it definitely saves. To be able to go 10% down with no mortgage insurance without any catch involved, without any, switch, or without me jacking up your rate really high. That's pretty incredible.
Yeah, and that was always the goal, really. Every time we had buyers, even first-time home buyers, the goal was always to hit that 20% mark in order to avoid that. So now that we're cutting that 20% to basically half, essentially, just a tad bit over 10%. I mean, this is huge. I think this is going to change a lot of things for people, right?
Yeah. So now I'm just trying to get the word out, because, something that a lot of times, being in the lending world and talking to clients all day, and people that are referred to me, a lot of people just assume that all banks are the same,
Right. Right.
and I think that just part of what I'm passionate about is just, helping people understand, hey, you could talk to 5 banks on the same day and get 5 different quotes, and one bank
Yeah.
might not even be able to do the loan that you need,
Right.
because they just don't offer that. So, out of 4, I'm connected to over 40 banks as a broker. That's the model I've chosen. I like options, so I want my clients to have options.
Mm-hmm.
One of the banks now is doing 10% down, no mortgage insurance. So
Wow.
I've priced it out. I was when they did the announcement, I was playing with scenarios. I was
Yeah.
seeing, side by side, which I know I sent you. We can pull that up whenever you want. But
Yeah.
it's really big that they don't need 20% down anymore.
Yeah. So
and
let's run a quick
to
example,
avoid it.
maybe.
Yeah.
I do have this chart that you sent me,
Yeah.
and just so people can get an idea of what it looks like and what to expect.
Yeah. So what I did here is on, this is called the total cost analysis. And I created 2 columns. The column on the left, I labeled it strategy 1, which is a conventional 30-year fixed option with a 10.01% down. But this is not the no mortgage insurance option. This is just a standard 10% down conventional loan. Okay. Which has mortgage insurance, because most of them do, right? Except for the one bank I work with that now doesn't. So this is a standard loan that you would probably see at most banks, 10% down with mortgage insurance. So purchase price $500,000, loan amount $449,950, which accounts for the 10.01% down. The interest rate's 3.262%. This is a 30-year fix. The payment, including principal, interest, property tax, home insurance, and monthly mortgage insurance, is $2,682 per month. Okay. And the cash to close is right around $58,000. Okay. And some change.
Yeah.
Now, comparing that to strategy 2, it's the same scenario, except it's with the new program that just rolled out, the 10.01% down payment with no mortgage insurance. Okay. So purchase price, same. Loan amount's the same. Interest rate goes up less than an eighth to 3.375%. So I'm used to seeing, if a lender was to buy out the mortgage insurance for a client, that rate would shoot up potentially 3.6, 3.7, 3.8%.
Gotcha.
So now we have a extremely comparable rate, bypassing the need for mortgage insurance.
Really?
The payment is $80 a month less. The same cash to close. That's the thing. They're not paying anything for the buyout. It's the same cash to close. And then if you look down on the last, second to last column, it says savings over 60 months. So in the 5-year savings, when you compare both options, you'll see in the right column, it shows a value of $4,037. That means that compared to option 1, the no MI option 2 will save a client in mortgage insurance $4,037 over the first 5 years of the loan.
Wow. Okay. $4,000.
So there, and the thing is, the client's not doing anything different. It's just a matter of us being able to offer this program,
Yeah. So they save essentially, you said, about $4,000 over a span of 5 years, literally in just extra costs they would have on the same loan, essentially.
Yep.
Wow.
Same cash to close. So I wanted to make that point, is that, like, I've told this to some other lenders, and they're like, well, that's just lender paid mortgage insurance. I'm like, no, I know what lender paid mortgage insurance is. And the rate jumps up a lot, This is truly, a very, very, very comparable option, which really at the end of the day, is just going to help more people and hopefully get more people excited that they can do 10% down with no mortgage insurance instead of having to, traditionally go with 20% down.
Right. Exactly. So this is very exciting. Now, in order to qualify for this loan, okay, we've got the 10%, well, I should say a hair over 10%, qualified, kind of to get the down payment, I should say. Now, as far as getting qualified for this loan, I mean, are there any restrictions on the credit score? Do you need to have a premium credit score? What kind of candidate do you need to be in order to essentially get this loan or be a part of this program?
Yeah, great question. So the credit requirement is a mid score of 680 or higher.
680 or higher. Okay.
So 680 or higher. The loan amount cannot be below 200,000. So there's a $200,000 limit on the loan amount, on minimum, sorry. And
well,
then,
that's not a problem here in Sacramento.
yeah, exactly. I didn't think it would be, you know, just in
No.
case someone's watching this in, you know, Montana, I don't know, Wyoming.
By the way, Sean is a mortgage broker in multiple states. So if you are looking for those places with, you know, that 200 price range, he can get you that deal in most states, actually.
Yeah. And then it is for a conventional loan. So, for example, Placer County, we can go up to $625,000 loan limit on conventional.
Okay.
That's pretty much across the board with the new loan limits. So, as long as it's between 200,000 and below 625,000, and they have 680 credit, and it's a purchase, then that's really the only qualification there. Doesn't apply to refis. Maybe will in the future, but it doesn't right now. It just rolled out, so it's only purchase.
Okay. Well, even if that at that limit at 625,000, as we know, based on the market report that I've done just recently, you guys make sure you check that out. Fall market update. Our median prices for the surrounding counties is about 550. So most homes are selling right in that 550 range, more or less. So under 625, you could still get a fairly nice house and be in a good neighborhood.
Yeah,
no problem.
Big time. How many times, Sam, do you have the conversation where people, you know, whether it's first time buyer or maybe someone who's moving up, really are shooting for that 20% down, mainly to avoid mortgage insurance?
Yes,
it's
most of the time.
Man, yeah, it's probably 8 out of 10 times.
Especially the my Dave Ramsey fan clients, you know, they want to hit that 20% down and avoid all costs, you know, have as much cash as possible. I think this 10% down is going to be huge, because then, you know, as a financial goal to avoid mortgage insurance, which is usually the reason. Some people do want to put 20% or more down in order to have a certain monthly payment based on, you know, if they have fixed income or whatnot. Totally makes sense, and I'm all for that. So those situations happen, you know, or if they want a property and they want to rent it out, they want their payment to be a certain amount. But on the other hand, most people, it is to avoid that mortgage insurance. So with that out of the way, they're sitting on another 10%, you know, if they've had 20% saved, or can just start shopping for the house sooner before they actually hit that 20% goal, you know?
Big time.
Which kind of in this market, as we're heading into the fall winter season, it's already starting to develop a little bit. We have this fast, slow pace that some people are still picking up some very nice homes right now with a lot of opportunity. So could probably take advantage of this loan even this year.
Yeah, absolutely. Yeah, it's totally live, and just trying to spread the word, and I appreciate you bringing me on to talk about it.
Well, yeah, as you know, I've got the huge influence here on YouTube, so I wanted to share it with everybody. Just kidding, guys. But if you are interested in getting a loan or just seeing what this looks like, I have Sean's info down below. You can send him an email. It's going to be in the description. So send him an email, say that you saw this video or you heard through Sam, and he'll take care of you. Now, I really like that this loan is not asking for some absurd requirements, especially when it comes to credit score. I think a median credit score of 680, I believe you said. I think that's really doable for a lot of people, right?
Yeah, I'd say a lot of people, it would be. Yeah, I agree with you.
So before we move on too much further into this loan conversation, this guy Wiz asked, where can I get a house for $200K? Pop question.
Memphis, Tennessee.
Come on. I knew you were going to say that. So what's in Memphis, Sean?
I mean, Memphis, the home values are very low compared to the average. And it's growing like crazy. So in 10 years, they probably won't be there, obviously. But right now, I just picked up a house for $232,000.
232.
Yeah, investment property.
Okay.
4-bedroom, 2-bath, 2,000 square feet. You know,
2,000 square feet.
Yeah.
Wow.
Yeah. And it's been fully remodeled, and that's 232 after the remodel. So there's definitely pockets. You know, if you want to get more info, I can send him some more options, but that's just the one that popped in my head.
Okay, so 232 in Memphis. I know a little bit about this deal because we chatted about it.
Yeah.
But would I be able to do this 10% down if I lived in that area, or let's say I lived in Tennessee and wanted to get that house? Would I be able to do that?
If it was owner occupied.
Okay, owner occupied.
Yeah.
So primary residence is required for this loan.
Second loan, I did see that it was available for a second home.
Oh,
I just
okay.
haven't checked out the guidelines yet. I've been really focusing on the primary.
Okay, perfect. So we'll check it out on the secondary, and then we'll update that too.
Yeah.
But yeah, so Memphis, Tennessee is up and coming. Actually, I did see it on some of a few people's rankings of hottest cities, for rental growth. So I think that's awesome. And if you guys are interested in a rental out there, Sean knows quite a bit. I'm sure he can get you hooked up with some people that can get you a cash flowing property.
Yeah, for sure.
Awesome. So credit score doesn't need to be too high. You don't need to have crazy qualifications for this. Let's jump into rates. What are the rates doing right now? Where are you seeing the rates? Are they good? Are they bad? What's your experience with the last few weeks?
So rates are still amazing. We're not at record lows anymore, but they're still super low. This last week, I've been locking conventional loans in anywhere from 3.25%, with either no points or minimal points. Points are, buying down the rate, I can get more into that if you want, but I do see, based on inflation, if you've been following, I'm sure you've been seeing it, just the stuff with the economy and the Fed. Inflation is the enemy of rates. So I project, and a lot of mortgage professionals are seeing the writing on the wall, that rates are going to be going up, continue to go up into 2022. Gotcha. So I've been encouraging the people who are on the fence, hey, it may not hurt to really start looking now rather than in 4 months. I don't, and when I say rates go up, I mean, it's relative, right? They're still really good, 3%, 3.2% right now. That's a great rate. That's a historically amazing rate,
Yeah.
And it's up about 0.25% from record lows. So we're 0.25% away from record lows. I mean, rates are amazing, but due to inflation, I do expect them to climb into 2022.
Okay, so rates have gone up just a tad bit, but more or less 0.25% ish.
Mm-hmm.
But we're still technically in historic lows,
100%.
And but I still hear the conversation from people over and over again. Well, they were under 3%, and maybe they'll go back down to it. And, it's just like that conversation. Like, you don't know it's the good old days when it's the good old days. Yeah.
Sure.
So sometimes the good times just pass, and it is what it is. I was just talking with another friend of mine who's done some real estate investing over the years, and I forget when he bought. I think 2012-ish or something. He was buying his first home at about 150,000, and everyone in his family was telling him, like, we would never pay that much for a house in that area. You should never buy it. It was just total like this super starter home, fixer, half of the stuff hanging down. But just a few years later, they went up like 100 and something in equity.
Mm-hmm.
And while everyone was telling him, like, don't do it, he still did it. Said I had to do something. I was having a family that was growing, and then made a ton of money on the house. So there's one of those things of, like, opportunity sometimes is today. As far as timing goes. So that's awesome. I'm really glad that this new loan came out. I mean, it's definitely getting me excited about it. Do you think I'd be able to purchase a multifamily primary with this sort of loan?
I'll have to double check. I'll get back to you.
Okay.
Yeah. I'll have to take a look. I don't know off the top of my head yet.
You guys already know my wheels are spinning.
I know where you're going. Yeah.
So rates are still pretty good. We're still hovering pretty good. And again, also, if you guys have thought about refinancing, you've kind of been missing the boat, and delaying it, reach out to Sean down below. He can send you a quote for a refi. Or if you even wanted to pull some cash out, not suggesting you do, but if you wanted to see that option, reach out to him and his team down below. I wanted to ask you, how quickly are you guys closing home loans right now in this market? What can people expect in this market?
I say our average right now is, 17 to 21 days on average. Not everyone wants to close that fast. Sometimes the sellers need more time, and which is great. But if we need to push it, 17 to 21 days is comfortable, and definitely, I mean, with the amount of offers that some homes are attracting, definitely seeing speed as, like, not all banks are fast, so the banks that are quick, it definitely does provide an advantage to the client if that's something the seller wants. Because sometimes, more often than not, I'm seeing that the seller would rather close as quickly as possible, and then maybe sit in it for another week for a rent back.
Yeah. Yeah.
Just get it done. So
Yeah, exactly. And that's been the pace too. Some people are wanting to upsize or get into another property from the equity that they've already built. And so a lot of them do want that quick sale so they can get their money, and then they'll rent it back or stay in the property just for a few extra weeks before they get into their next house.
Yeah.
Or move out of state or whatever they're doing, or downsizing, whatever it is. So that quick close is super beneficial, especially when you're competing versus a few other offers.
Yeah.
And the bank that you're with, let's say it's some large retailer. I don't want to mention the names, but if I mention them, I mean, they're across the United States. They just have, a lot more, I guess, loopholes to go through in order to get your loan. And then the timing is always just slower. I usually get quotes like 25 days, 30, 35 days. And I'm like, do you guys even sell in this market? Everybody here is closing in 3 weeks or less. Like,
Man. Yeah.
what's the deal here? I know sometimes they offer amazing rates. I get that. But at the end of the day, we're competing against other people in the marketplace, So there's this kind of like limbo effect that sometimes I'm dealing with, especially if someone's already kind of been pre-approved through a bigger bank in the area.
Yeah. No, you're right on. You're spot on. In
Yeah,
this competitive market, I mean, any advantage someone can get helps,
Yeah. So speaking of advantage, I'll give you guys an idea. I had this amazing client who reached out to me online, I believe through social media, saw one of my videos. She might even be watching this. Awesome. If you are, thank you. And she reached out to us. She's like, hey, I'm getting pre-approved through this other bank. It's a credit union. I'm like, great, no problem, no pressure. She sends me a property that she really likes. I'm like, hey, just want to let you know the offers are actually due tonight at 5 p.m. Just wanted to relay that to you. If you'd like to see it today, I mean, we'd have to go and do it pretty fast. And she's like, okay, no worries. We'll let it pass. Calls me back. She's like, you know what? Spoke with my husband. I think we really want that property. I'm like, great. Well, I need to submit an offer within the hour. What would you like me to do? Your pre-approval is still not in. You're dealing with this big, credit union that's probably going to take a week or two just to get you pre-approved. I told her to reach out to Sean. Sean literally had her pre-approval like within the hour, if I'm not mistaken. By the time I was done writing up the offer, we already had a pre-approval letter to match it, put it all together. She's ready to go. And we submitted the offer, and a very strong offer at that. So she wrote me back. She's like, Sam, this guy is super fast. You guys are super fast. I'm very amazed that we even got it in time. And these are kind of the stories that we have sometimes, it's crazy, but this is the life we live.
Yeah, totally. Yeah, no, that's good feedback. I didn't realize the whole backstory, but I'm thankful to help and appreciate your trust, man.
Yeah, absolutely.
And I see this hashtag a lot, and people say like who you work with matters. You know what I mean? You probably see that too, but it really does. It really does, and I think like a lot of first-time home buyers don't really know what questions to ask, so having the conversation with a realtor, watching your YouTube, watching your Instagram, seeing all the content you're putting out, having a conversation with a loan officer, like all that stuff really helps on the education piece so that they don't feel as, freaked out about trying to jump into a house quickly,
Yeah, exactly. And I'm all about taking time and making sure it's a good move.
Yeah.
But sometimes the pace of the market, doesn't really go with that value sometimes, I mean, if you find a house that you like, sometimes you just have to kind of Hail Mary, and then, start taking your time if it sticks, and then kind of go for it. But sometimes that is the pace of the market, and working with somebody who can keep up with the pace really matters, because some people can't. I'll just be honest. Even sometimes I'm even considering like, why is the market moving so fast? Like, this is crazy. Everyone is acting like houses are on fire. They're not. Can we just take a breath? But that's the pace that we're in. So it's great to work with you. I really appreciate that you moved so fast on that one. I mean, she was honestly super pleased. So I'm glad it worked out.
Appreciate it, man. Glad to help.
Awesome. Well, hey, man, it's been great having you here. I hope, guys, that this has been super insightful on this new mortgage program that's out, reach out to Sean and his team down below. Again, he's licensed in multiple states. So if you wanted to run a few scenarios, maybe get a rental out of state or move out of state, you could talk to him about that and he'd be happy to put you in the right direction.
Yeah.
Sean, thanks so much for being on the show.
Yeah. Thanks, man. Thanks for
All right,
having
my
me.
friend. Take
Appreciate
care.
you.
Bye.
All right.
Guys, I hope you enjoyed this live. Just wanted to remind you that we are live every Tuesday at 5:30 p.m. I also hope that you would share this with your friends and family that might need to see this video or are considering getting a home loan or purchasing in the Sacramento area. I'd love to help you any way that I can. Reach out to me and my team down below. Again, my name is Sam Golovey. Thank you guys so much for watching. I'll see you next week.